Good afternoon, traders. It's Lee Lewis with Trader for Traders with the daily market update for Friday, November 14th. All right, so thought I'd first do a quick review of what happened yesterday. So we had the Australian employment numbers come out yesterday about 4:30 my time. We were all anticipating, at least I was and Brad was, some really bad numbers, and it turns out we got just the opposite result. We ended up with a lower unemployment rate, much higher unemployment, nice high participation rate, and we would expect the Aussie dollar to strengthen on that. We'll go into the details of whether that happened or not in a minute. And then later in the evening, 11 o'clock my time, we had the British GDP numbers come out, and those were, as anticipated, those were very poor. So the GDP estimate was 1.1, so below the predicted range. Not great numbers. And then it was followed by the industrial output numbers being poor as well. So we should have expected to see sterling decline and get much weaker. But we can see right now the markets are not acting really the way they should. So we saw those strong Aussie numbers result in, well, Aussie got weak against the Swiss, got weak against the yen, weak against the euro, weak against sterling, and then kind of mixed and down against the Canadian dollar. And we take a look at sterling, and those very weak sterling numbers resulted in strength against the Aussie, strength against the Kiwi, continued strength against the yen, unmoved against euro, weak against Swiss, so that was in line, and then very strong against the Canadian dollar. And that's in the absence of any other really strong fundamental release coming out for these other currencies. So there's something going on in the market that is making the currencies act abnormally. And I think what we're seeing here is a reaction to the U.S. government opening up. We're starting to see some headlines about the realities of that. There's a lot of uncertainty that's going to be coming out because we had a complete absence of economic indicators coming from the U.S. government, from the Bureau of Labor and Statistics. We're now starting to anticipate that all of that information is going to start coming out in bulk. So where we had a vacuum, now we're going to have all the information at once. And I think what we're seeing here is the market anticipating that that could spell a lot of volatility. And that was reflected in what happened in the market today. We have the VIX is up to 20, and 20 is kind of the threshold. Below 20, you consider to be low volatility. Higher than 20, we start to get higher volatility. So it was actually up above 20 today earlier, but it settled back down to right at 20. But when we have high volatility, that doesn't work well for the equity markets. So NASDAQ down over 2%, S&P down over 1.5%, Dow over 1.5%. And you can see that reflected in where the equities ended up, right at the longer term support lines, and NASDAQ went a little bit through it. But we're seeing the markets behave correctly as far as a correction goes. They're stopping above that long-term support. So while the markets are, the equity markets are down, they're down in line with what might be predicted on a profit-taking day based off of increased uncertainty. But you can see it's not really moving the other things. 10-year treasuries pretty much unmoved. Dollar index a little bit down today, weakening of the dollar. Gold down a little bit, which isn't typically in line with when you see a higher VIX. Typically there's a direct correlation there. And you did see a weakening of crude, and it looks like it started to rebound a little bit. It was down to just under 58. Now it's about 58.5. So what we're seeing is a completely mixed market right now. And you can see that in the hourly majors. You can see that dollar index down, but yet strong dollar against the loonie, a little bit stronger against the yen, down against the Swiss, down against euro, down against sterling, but strong against Aussie and unchanged against the Kiwi. So what we really have is a very disconnected market here. And I think what the market is trying to figure out is what is going to be going on from here. What are we going to see now that the U.S. has opened up and we're going to be getting all of this information that was kept from us? We're going to be seeing terrible information coming out for October, November, good as predicted. Market doesn't like uncertainty, so in the absence of certainty, we have the industrial traders pulling their money out of the market. They're going to hold on to it, see what's happening, which I think was one of the major reasons for what we saw today in the equity market. So what do we have going on for the rest of the day? Well, not a whole lot. Coming into Friday, we do have some industrial production numbers that might move the needle. I don't think it will. We have some, we're not going to see these CPI numbers. The federal government has said they're not going to release those at this time. So we really don't have anything coming up that was going to move the market from a predictable fundamental standpoint. So from my standpoint, I'm out for the week. I am going to take a look, get my charts lined up, get ready for a week next week when we should see some more fundamental releases coming out, get a better idea about what the market's going to do. And I think that's what the professional traders are doing as well. So I like to trade like they do. So for me, I do not have a trade recommendation today. And that's it for me. So have a great week, and we'll catch up next week. Happy trading.